Ladies and gentlemen, in this video I passed a phase 1 account in basically one trade, and I will show you the proof. In the video I'm going to show you exactly how I did this, exactly the strategy I was using, and how you could potentially catch the same sort of thing when you look at the chart yourselves. If you're struggling with phase 1 challenges, phase 2 part of the challenges, like we all have, like we all will continuously to do, then this video might help you out a little bit more in taking that one step closer to becoming profitable. So without further ado, let us get into the video and we'll crack on. So starting off, I just want to mention the Discord. This play was called in the Discord. As you can see here, the couple zones I had on the daily analysis. This can always be found in the sections of the signals and charts, and every single day, as you can see here, I post what I'm going to be looking for. On a website I also do a video version of this, which is a bit more easy to understand. However, for the free Discord, in the description, you can see what I am looking at and what I am planning to do throughout the day. I also post what news is looking like for the day. So there's just a quick little plug there of the free Discord, and you can always feel free to shoot me a DM. I have blurred out people's names on the left. But yeah, if you ever want to shoot me a DM, please feel free, and I'll get back to you as soon as I can. Jump right on back to the chart. You can see the trade we took. You saw the call out and we were looking for a break and retest. So if we just jump back on the replay mode, I will show you what I was looking at. So before we saw price break this level, why are we looking at price to break this level? Because if price broke this level, then we would know that structure has broken to the upside. We saw that we were in some sort of consolidation zone right here, and to make it a bit more visible, I will simply just draw it out. I was simply waiting for a break of this consolidation zone, a tap back into a key zone of interest, which for us are US highs and US lows, and then I was looking for a 5-minute reaction candle to take the trade to the top. So in this scenario, as soon as I saw London session break through this consolidation phase that we've been having, then I was all game for a pullback and maybe a buyback to take price to the upside. Now, what happened in London, I don't know. Was it news related? I don't know, but price completely pushed through and allowed us to then look at, if US session were to come down and pull back into a zone, what zones would we target and how would we then get an entry from these zones? So, if we look, we use previous US session highs and lows. Now, why did I use the one that I used? To explain this, and from previous testing, the previous zones I feel like, and I always get better percentage trades off, the previous daily US highs and lows. If price is completely pushed away from the previous US highs and lows, I would go find other ones. In this scenario, the perfect retest would be the one from yesterday. You could say, oh, well, you could target this one, could you not? You could, but then you have this zone down right here. So what's stopping price from pushing all the way down, breaking through this, and tapping you in here? So yes, you could have marked that out and potentially said, look, if we get a 5-minute, then we could react and push off here. Or we could wait for a stronger zone to get hit, tap in, maybe gives a reaction candle so we can take price up to the top. And that's exactly what I was looking for. I want the strongest zone possible, and if we can hit it and get a tap in, and my risk to reward can be better than if I were to get in a trade off this circled zone right here, then I'm going to take that every single time. A lot of the better trades and a lot of the higher risk trades, higher percentage trades that I take are from these stronger zones. So yes, it's all good and well marking every US session high and low zone that we can find, but really we want to be marking the key strong ones. And in this scenario, the strongest one, in my opinion, and from my trading experience, has been this one right here. So you might trade my strategy, you might try this out for yourself, but unless you've had some real world experience and some experience in the market for years on years, then you're not going to be able to notice some of the things that I notice. I can give you the blueprint, and I do. I give you the blueprint of what I do, but there's still going to be times where I look at the chart and I say, that's not a clean setup. But you would take it. And because I've had that experience of taking these unclean setups and losing, then you can see where you lose I'm not even in the market at that point because I've looked at it and I've said, that's ugly. I'm not trading that. On the other hand, you've seen it and be like, this is a setup. I love trading. I want to be in a position. Let me get in a position, and then you end up losing. So it's all about having that discipline, and it's all about having that experience. So don't beat yourself up too much if you are trading what I'm trading and yet you're finding yourself still losing. It is good to lose. Love to lose. Please fall in love with losing because it's the only way you're going to get better. To get back on track, to get back on the trade, so we see this and we break above. It's a cleaner setup. It's a cleaner setup, and I'd rather take the setup from this zone than this zone, simply because it's clean. So now every morning that I mark down these zones, we now have a point of interest, I like to call it. Once we have the point of interest, the 30-minute, unless we're looking for targets, isn't really all that useful anymore. And you'll notice I have two time scales on my chart, the 30-minute and the 5-minute. That's all we need. That's all we use. We have to keep it simple to get winning trades. As soon as you start complicating it, that's when it becomes a problem. Now, I will just say you're probably looking at the chart and thinking, what the heck is these colors? I'll tell you, Asia session is black, London session is blue, and US session is white. The whole point of this strategy is that we trade zones off each other's zones. London session, we trade London session zones, aka the highs and lows of previous US sessions. London session, sorry. If we're trading US session, then we're only going to look for highs and lows of previous US sessions to get our entries, for example, today. So if we jump to the 5-minute then, because the 30-minute, like I say, we have our zones. We have gotten our zones on the chart. Therefore, all we need to do is go on the 5-minute, sit on our hands and wait for a zone to be tapped. A lot of the times, your zones aren't going to be hit. They're going to actually fly up or just get exploded right through. And this is why we have two zones marked out. You could think, well, that's a bit of a cop-out having two zones because anything could really happen. And that's a perfect way to think, because anything could happen. If price broke all the way through and gave us a tap back in here, we've broken structure to the downside. I want to see sells. There is no reason if price broke this low, I would still be wanting to see buys. The only reason we broke out of this zone and get a tap back in is why I'd want to see buys. Because we broke back up, got a tap back in, retest to take price higher. If price broke below, we've clearly broken structure to the downside. Hence, therefore, I will be taking sells. Now, you react to what the market gives you. Right? You don't try to assume what it's not giving you. Right? If you're seeing a huge sell-off, and you keep trying to buy the low, and a lot of you would have had this experience. You keep trying to buy the low of this price that keeps on falling. You keep trying to catch the low so you can get the best risk to reward, the best buy you can possibly get. But that's not the case, and you probably found out the hard way that isn't the case. You buy in when price is shooting down low, and it just keeps on shooting. You keep trying to buy the low, buy the dip, buy the dip, buy the dip, buy the dip, and it never stops going down until maybe the end of the day, and then Asia session just kind of carries it up a little bit. But Asia session is Asia session, and we can see by here, normally it doesn't really do a lot. So that's why it is imperative that you trade what the market gives you. Trade what you see, not what you just in your head presume is going to happen because you've drawn a square or you draw a line on a chart. That's why us traders get the mick taken out of us a lot by the professional guys, because they think, well, drawing a line on a chart is ridiculous, yet drawing lines seems to work. So therefore, who's really wrong? Maybe it's just them being big-headed, who knows. But if we get back to the chart, we're only going to take clean setups, and this was a clean setup. We broke up out of the consolidation, got a tap back in, and we took price higher. That's what we're going for. So again, we've got our zones on the 30-minute, and I'll try not to get distracted this time. And then we're just going to sit on our hands. We just sit on our hands, and wait for price to come all the way down. When price comes all the way down, as you can see, we had our tap into the zone. We are waiting for a 5-minute bullish engulfing candle. From this zone, this confirms to me that buys are in session, buys are in place. If we get a strong reaction from this zone on a 5-minute close, and always if you're going to be doing this and taking this as an example, always use a 5-minute candle close as your entry and make sure it's a bullish one if you're in for buys, a bearish one if you're in for sells, and always make sure it's engulfing. This for me is a strongest reaction that we can get from the market in terms of, okay, look, I want to be in for buys because this is my signal. On 3 minutes, there's no point doing it because in the 2 minutes it could have shot to a bearish candle, and that's when you're going to get caught out. So now, understanding that we are looking for a 5-minute bullish engulfing because we're in for buys, this is what we're simply going to look for in the chart before we even think about getting an entry. Again, always wait for it to close. Never be caught out just because you think the candle is going to close bullish, that it will close bullish. Even if you have a minute left on the candle, always wait for it to close. On the 5-minute, that is why we need the patience, because it will save you from so many losses if you actually just wait, if you're in for buys for a bullish engulfing candle. A lot of the times you're going to be saved from price absolutely shooting down if you just have the patience and wait for 5 minutes. Just wait 5 minutes for it to close and then get in. So if we play price along here, we're simply looking for a bullish candle close. And what did we get? A bullish candle close. This engulfed. It reacted from our zones. Where do we have our stop losses? Our 3 rules come into play. Below the bodies, below the wicks, and below the zone. This ticked all 3. Below the bodies, below the wicks, and below the zone that we drew out. Where would we target? Now, if you watched my imbalance video previously, can't remember, maybe 2 videos ago, then you will see a high point of interest for us at these top zones here. If price decides to push all the way up, fantastic, and then normally we get a strong reaction from these levels that'll take price all the way down. So if we play price all the way along here, we can see we form these structure points. At these structure points, this is when I figured, okay, look, we pushed into profit, time to move my stop loss. Where do you move your stop loss? You have 2 options. You can either move it on break even, or what I like to do, below these structure points. I like to figure that if price moves below these structure points, then the trade is invalid anyway, so I might as well take as much profit as I can out the market before it stops me out. Therefore, that's why I move them under these structure points. I could have it break even, sure, and maybe it might save me from a few trades, but I would rather take the amount of times it hits when the stops are here, normally build up to what the trades would be anyway. So all the profit you make from these trades would add up to the few trades that you win just from having your stops down here. So I like to have them below structure points, because if that structure point breaks, then it's likely that we might flip to the downside or vice versa. So like I say, the stops were moved to here. I'd love to do it on the actual long position tool. However, you can't unless you do something like that. And then it just ruins the whole thing. So we have our stops here, and then we take price up. Now, price did react up here and started to come down. If we play price on a little bit, it sort of just fizzles out to about there. And by this point, we were out of the trade. If I just show you my phone right here, we can see there's 2 little numbers at the bottom there. Ooh, at the bottom there. I don't know how well you can see those, but they basically, that is 10%, £25,000 account, and therefore that was that's phase 1 complete just by catching 1 simple trade. So the targets work, and I would have been in this trade till 5 o'clock if 10% was not made. 10% was not made, I would stay in this trade till 5 o'clock because they are some of my rules. If we just skip along to 5 o'clock, where did we end up? So we would have closed out about 2% anyway, but I was risking a lot on this trade. We got our break above, we had our retesting, and we got a 5-minute engulfing. And this is as simple as trading has to be. You do not have to learn every single new thing. You don't have to have 10 indicators on your chart. You just have to keep it simple. And you may think, well, you literally have 2 timelines on your chart, the 30-minute and the 5-minute. Is that really all you need? Yes. Yes, it is. Because this is all I have on my chart. So therefore, this is how you go about trading, and it's the simplest thing. And like I said, the Discord is free if you want to join it. If you want to see what I'm looking at, by all means. If you want to message me privately, by all means message me and I will get back to you. Ask me any questions. I mean, feel free. I mean, any questions you have, it doesn't even have to be trading related. If you just want to spark up a conversation, I'm all ears. So yeah, this is how I caught the trade, and you saw the profit there. Phase 1 has been completed, and I've got my phase 2 details. So hopefully there might be a trade tomorrow that we can take, but again, we will see what the market gives us, and we will react to what the market gives us. We won't just create illusions in our head that if price does this, it's going to go to the moon, etc. You know what I mean, and you're probably guilty of it yourself. However, thank you so much for watching. This is another breakdown, and like I say, any questions, shove them in the Discord. But thank you so much for watching.